All right, today we're looking at ranges. You know that we have two types of market structure basically. As I said, the market is either buying or selling. But before price will move from being bullish to being bearish, there's always a consolidation phase. And the purpose for that consolidation phase is simply to engineer liquidity, to create orders, either to the upside or to the downside. So we have buy side liquidity, sell side liquidity, and the likes. The only purpose or sole aim is to create orders. That's all. Doesn't have any other. So if the price is bearish, let's say in this formation, price is bearish, and then before price cannot just break here. No, price will do something like this, can give you something like this, give you like a double bottom, come here, and then create that liquidity, take away all the sellers from here, take away all the buyers from here, and then once it's successfully takes away the previous buyers, it goes up, and then it can now break structure. Once price breaks structure, we expect to enter at a discount level. Then price has changed from being bearish to being bullish. This is the normal pattern that the market runs. So it creates a sell side liquidity and then takes all the previous buyers away from this side. So this is what we now refer to as liquidity sweep or stop hunt. So it stops everybody out, rallies up, and breaks structure. Why does the market create this pattern? The market creates this pattern because the market runs on liquidity. It will need orders. Price is selling from what you have here. The market is already bearish. Smart money cannot just turn like that and load orders. So buyers must come in. They will take all their orders. Sellers are here, sellers are here, sellers are here. So you see that while you are returning upwards, the former structure becomes liquidity. Former structure becomes your liquidity point as external liquidity now. These were all former structural points. While price was bearish, these were all former structural points. But right now that price has changed momentum and is bullish, this becomes your point of taking profits because all these ones are now external liquidity. They are all external liquidity now. Why price has changed momentum? These ones now are external liquidity. You get it now. So once we cannot talk about the concept of ranges without understanding market structure properly. That's why I have to start from here. So you have this break in market structure, then you have all of this. This is your external liquidity, or yes, this was external liquidity while price was bearish. All these structural points, these were external liquidities. That why price was bearish. External liquidity. Let me put it like this: external liquidity. Why price was bearish. This was also external liquidity. Why price was bearish. This was external liquidity too. Why price was bearish. I'll put that in that place. So now price has changed momentum. Simply telling you that I am now ready to buy. I'm now ready to go up. And since I'm ready to go up, while you were coming down, you take an entry from here, which is 50% of all of these. Take an entry from here. You can take profit from this external liquidity. external liquidities are points for taking profits. You had an entry here, then you want to take profit from this external liquidity. The price came here, you had an entry here, or let's say you had an entry here, and the price came, gave you a double top, came and took you out. Your orders have been collected and switched to another person. Because if you are in the market and price hits your stop loss, it means your order, your open position has been given to another person. So let's say you entered here again, and then you seek to take price, your profit from here as external liquidity. Now that price has given us that break in market structure, price comes here, your next target will now be to the left. This becomes your next target. You take an entry here, this becomes your next target for taking profits as external liquidities. You take an entry here, you can now take profit from here, or you take profit from here. These are all external liquidities. Take profit from here, all these ones becomes external liquidities. Let me leave this to something like this. So this will be external liquidity. So you got an entry from here, you want to take price from this place. You got an entry from here, you want to start considering taking price from all of these moves. So this is how the market is engineered to run. Before market price will move from being bearish to being bullish, there's always that consolidation phase where liquidity is being built and then orders are being loaded. What it means is that a lot of people are selling from this place. There are a lot of sellers here, and their stops are just above this place. Entry here, stops above here. People are buying here, entry here, stop. So the stop loss, remember I told you, stop losses is liquidity, liquidity is stop losses. All your orders here, all the buy orders here are being taken, all the sell orders here are being taken. Market takes down and up, takes internal liquidity, takes external liquidity, and then we move up. So once price takes external liquidity, the next thing price will do is to come and take internal liquidity, which led to this break in market structure. And then we can have a change of the order flow. This is the foundation. Now, as I said, we're going to talk about ranges today. So let me write that for you. What is ranges? What is a range? I'll say a range is the most recent high and most recent low. Most recent high and most recent low. That's the range. I think that is bold enough. I want to ensure you want to see it. A range is simply most recent high and the most recent low. Structure must be taken from the higher time frame point of interest. So you want to ensure that you are not trading against the trend. You are following the higher time frame bias. So once you're able to spot the structure, the next step is your range. The next step is your range. So after taking this class today, what I will want you to see, what I would love to see on your chart is you must state your range. The range high and the range low. Now let's use the picture we have or the diagram we have on this place. Price was bearish in this form. So if we want to talk about the range, well, this is the most recent high. Okay, let me start from here. I'll still use this so that you don't get confused. Or screenshot this first. Screenshot this first. No, do we only draw external range on H1 and above? I will say no, I will say yes. If your structure is on H1, you are permitted to draw your range on H1. If your structure is on H4, you are permitted to draw your range on H4. If you are trading the range on daily, then you can draw your structure on daily, you can draw your range on daily. As we go, I'm going to show you when we get to the chart. So if you want to screenshot this, or let me just screenshot this and so that you have this. Okay, let's have this in the group. Might be necessary at the time so that I can exit that. Okay. All right, I'm using this. Yeah, my one. Okay, I'm using this. All right, sorry, I didn't know I was using this. Okay, so I think I can remove this now. So when price was coming down, this becomes your range high. So it's a range high, and this was your range low. How do you spot your range high and your range low? Price is bearish. Immediately you see that retracement, you mark the most recent high and the most recent low. Most recent high and the most recent low. Why are you marking the most recent low? Because price is already retracing. Price is already giving you that retracement. So where is price coming from? Price is coming all the way from here. So since price is coming from here, this is the last low created by this high. So we know by structure that price wants to go and give us a lower high to give us a lower low. So you want to catch the lower high. What do? You mark your most recent high and the most recent low. This is what I mean. Price is bearish, gives us a high, gives us a low. And then price began to give you something like this. And you are wondering what's happening. And then price keeps going like this. The retracement is not just going to be one straight move. It's still going to be on structure. Then you have an idea that this becomes your last high until price breaks this high. That is when it is a break in market structure, not this high, not this high. This is not the high. This is not the high. This is the range high. Then you mark your last low, previous low, previous high. So this becomes your top range or range high, depending on anyone you want to call it, top range or range high. So sometimes I can write top range, sometimes I can write range high. It's the same thing. Top range, the range at the top. Let me break it down. So you can have this as down range or low range or range low, whichever grammatical expression you want to give them, more grammatical terms, depending on your English teacher. According to my master then in school, if you speak bad English, you say, okay, depending on your English teacher. So depending on what you want to use, is the same thing. Top range, down range. You want to mark the range high and the range low. Why are you doing that? Price is bearish, number one, market structure. Then you now have a knowledge that price is going to a lower high. And since we are going to form a lower high, that is where you are looking to get an entry. So this becomes your lower high. So you mark your range, top range, down range. And then because you understand price action, you understand market structure, you know that price should now from here reverses. Don't think that price is not just going to blast through. No, mark your top range, mark your low range, and then expect to get an entry from here. Expect to get an entry all the way from here. If you are getting what I'm trying to explain, please drop a 1-1 for me. You can drop your question in the box. We'll be looking at them one after the other. And if you want to speak, you can just speak and let me know. Just speak. All right, so let's go. We have top range, down range. So now you want to find out what are we looking for within this place. It is when price comes to your lower high, the top range, you now want to start considering, is there an institutional candle? Is price at the 50% of the last reversal because this was an expansion. Is there a candle, a smart money cube, or something that maybe price should come to? You now want to find out. But price must have given you all of these retracements before considering this. So first, structure is bearish. Now price is coming down. You want to ensure you wait for this lower high. So mark your range. This is the range I'm going to trade. Once price comes and blasts through, once price comes and blasts through, then it means that I already have a break in market structure here. So this is my down range. I'll need to wait for when another retracement will start coming. Another retracement is now start coming, then here becomes my top range. Because price has given me a break in market structure, here becomes my top range. I'm now expecting price to come and give me a lower high, and then I can take market to a higher low, then I can take market to a higher high. Are you getting it now? So this just how to mark your range, most recent high and most recent low. Most recent high and most recent low. All right, let's go. Let's go. Let me begin to give you some things you should take note of. I'll just give you one more example, then we'll go to the chart. Let's identify ranges from the chart. Can I recap? Yes, that's what I want to do. I want to give you another example so that you're able to get it. Now we are in a bullish, sorry, let me still use bearish. We are going to go to bullish. We're in a bearish trend or a bearish market. And price is giving you something like this. This is a bearish formation. These things might not be picture perfect, but you already know structure, so you understand what I'm talking about. Price is giving you something like this. I'm taking structure from the higher time frame. So this is my daily high. So I'll use top range now. Top range or range high. Top range or range high. So where is going to be my range low? The last low. Immediately price started retracing. So this becomes the last low. The most recent low. So I'll say down range or range low. This is range, top range, down range. So long price has not broken this, this is still my top range. Price has retraced from this. This is my down range. I'm not going to want to start buying from here because this is clearly against structure, except I see a lower time frame evidence that tells me that I can buy. So like Dash, I think Dash should be on the call. There was a trade he took on the 75 in a lower time frame. It was so beautiful. Went to a lower time frame, I think the 5 minutes, saw a break of structure. It's the same thing. You want to wait for that evidence, a break of structure. He played the retest and he caught about 1 to 7, risking $1, made $7. That was so beautiful. But it's because you understand the first thing we have taught, market structure. Once you understand market structure, you can play in between the range. I know that I want to play a lower high all the way from here. So since price is retracing, I'm waiting for that evidence around this place. So price comes and give me that lower time frame evidence, a break and a retest, or either 15 minutes or 5 minutes, depending on the time frame where this range is spotted. Then I want to catch the sell from here and take it down, knowing fully well that the down range, I'm going to be using it as my external liquidity, my take profit. External liquidities are used for take profit. I'm going to use that as my external liquidity. So this is how to play your range. So if this is daily range, this is my top range, this is my down range. Now on a smaller time frame, Remember, I said this is still going to give you a normal bullish formation because this is a retracement, a bullish formation. Sometimes price will give you something like this, break here, and then you're expecting to catch this retest. Price comes, break this low, and then you want to start selling from here. The question is, you want to start selling from here. Has price traded to 50% of the whole move that led to this expansion? Has price traded to a discount level? If it has not traded to a premium level, rather, you should know that that's internal liquidity. So price comes, give you this retracement, and then give you something like this, and then comes back to this place, and then goes down. Now, why did price give you all of this move? Simply because it has not. Why price gave you all of this move? Price has not come to give you the lower high. So in between, price can just give you some small break. You now want to jump in. No, price has not given you that lower high. So it gave you like this, came down, except it comes to touch this, giving you a lower high, and then makes a lower low. Here it's not yet valid. So you still want to stay within the range, allow price to come up. Let price come up. Once price comes up to your point of interest, then you cannot take price downward. You are playing the range. Once this range has been broken, your next top range becomes this. This is where you are looking at next. You are looking at this, and then you want to wait until price starts retracing. Once price start retracing, giving you retracement move, then you can now mark the range low or the low range. And once price starts retracing, this becomes your low range. You get it now? Then once here is broken, your next top range is this. Price can come, you wouldn't get all the whole entries. Price can come, give you something like this, not up to 50% and trade away and never come back to that place. It's not compulsory, but if it does not come to 50%, you shouldn't consider it. But this now becomes your next range. You're waiting for 50% and above. Price didn't come there, then let it go. You're waiting for all of this move, 50% of this last move, and then price didn't give you that 50%. Let price go. Price can come here and move out. All of this, you are taking 50% of it. Now look at this. Price came, gave you all of this retracement. Price came into the 50% and above. You got an entry here. You went down. This becomes your range high and range low. So this is how to identify ranges, and ranges must be identified in line with the trend. In line with the trend. Ranges must be identified in line with the trend. Now let me call this a daily, let me call this daily structure. Let me call this daily structure. I want to deal with daily structure now. Now in your daily structure, everything that is here, if you flip this, it gives you the same thing. So if price was this price is bullish, a high, a low, a higher high, a higher low, a higher high, and a higher low. If price comes here, this becomes your down range, and here becomes your top range. Price came and price broke above this, taking here as your take profit. Here becomes your down range. Here now becomes your top range. Immediately price is retracing. Then you want to wait for that retracement. If it didn't give you the 50%, which is a discount level, let it go. So that is just it. Let's go to, I want to show you something on the daily structure. This daily structure, let me just give you an example. Price is giving you like this, gives you a high, gives you a higher low, and gives you a lower high, gives you a higher high. High, higher high, higher low, higher high. Another higher low should be formed. But let me explain something. We are considering ranges. So first, you mark out your range. This was your range. This was your range. Top range, down range. Top range, down range. Range high. By range high now, you know what I'm talking about. And then range low, down range. So I had the range high, range low. Now, once price started retracing, I marked my range high, and I already have my range low because this is the most recent high. This is the previous low. It's okay. 1 minute, please. Just 1 minute. So now we have price retraced to all of this move. Price has gone up. So long price didn't break here, we are still bullish. Is that not true? By market structure. Price has not taken out the range low, the last structural point or significant structural point. This is daily. We are still bullish. Now, price comes here and price is retracing. Price is retracing. Where are we expecting? Let me stop, pause this first. Now you know this is your range. This is your range high. The next range high. This is your most recent range now. So this one is no longer the range high. And this becomes your range low. While this one becomes your external liquidity. So let me just put external liquidity. I just put a dollar sign there. That's external liquidity. So if you have gotten an entry from here, this first entry, I've gotten an entry from here. This would have been your take profit to the left. Now, price is retracing. We are expecting that price should come to all of this retracement move 50% before the expansion around the zone. So this is what I'm going to do, or this is what I do. I simply come and I draw my box, my rectangular box on this. This becomes my point of interest or potential area for accumulation. This is my potential area for accumulation. So I want to start looking for buys on lower time frame around this place, or I write it POI, point of interest. So whichever one you want to use, I have this. I know that we have not, this is daily structure, we have not broken this range low. So price is definitely going to come to this range low. This is my range low, where I want to get an entry within this place. I'm not going to come and then set entry here, and then this is daily. I'm having about, how many stop is this? About 119 stop loss. That's foolishness. When am I going to make a 1 to 3? So the high cannot even give me a 1 to 2. So we want to wait for that evidence on lower time frame around this place. So price keeps coming. You've identified your range. You've identified your point of interest, where to wait for price. It might take 2 days, it might take 3 days, it might take a week, but we want to wait for price within this place. So price keeps coming, and then all of a sudden, price goes up above this and breaks this. Price didn't come to 50% of this move. Then price gave us this. broke below this and comes here, and then price starts coming. Now, this is where most people used to get confused. They'll take this as high, low, high, and then this becomes their break of structure. This becomes their break of structure or break in market structure. This is one. This becomes their break in market structure because the body closed below the wick rather. So they are expecting that they want to get in from here. Let me bring this one down, let it be clear. And then price actually came, gave a retest of that zone, and then price starts coming down. Price starts giving you this order. Don't forget, on your daily, this is not a structural point. On your daily, why is it not a structural point? This is just liquidity sweep. That's what I'm saying. Because right now, this is no longer your range high. This is now the last range high. The previous or most recent high. This is a fake out. This is not a break in market structure. On daily, this was the last low. So we have price come to give you something like this. I'm just trying to give us a market situation. And if price comes to this point of interest, don't make the mistake of expecting that price will just break. Fine, you can play this move. If I am on chart and I see this, nothing will stop me from playing it. Because price has given all of this signature. Price has given all the signature that we trade in smart money, right? This is smart money entry. Liquidity sweep or storm hunt, and they will want to wait for entry in this zone. Are you following now? You are very correct for taking an entry here. I will take the entry too. But where we miss it is that when price now comes here, we are expecting that price should break. Instead of taking 1 to 3 or taking profit at the 50% of all of this move, which is the open of this price, which is this place 50%, take your profit there. We are not expecting a magic to happen. No, price can come. What price we do, remember this is daily structure. It will be difficult to break here. And if price break, price is not going to come back to this point. So price will come, give you all of these kind of movements. And then people will jump in. Daily is buy, and then price will come, weak them out, and then we will have something like this. This is daily. Price has changed direction. Now, if you get an entry from here, this is the best entry. But nothing stops you from playing this sell. Are you getting it now? Then you want to wait for this entry as the best entry so you can sell from here, take profit at the 50%. Then you want to catch the buy from here, having the mind that we are coming to this place as your range high. We are coming to sweep here. So you catch this, we are coming to sweep here. What happened to this break in market structure here? It didn't break the main structural point. This was just a structural point in or between the structural point. Structure within the range. This is structure within the range. Range high, range low. This was a structure within the range. So we play the structure within the range because of our knowledge of smart money. If you are getting what I'm saying, please just let me know if you understand what I'm saying. Let me know.
I followed it.
So this is just how to play. We're going to go to the chart now. It's not supposed to be a long course. So this is your bullish momentum. You want to still take price from here. I'm still going to wait for price here no matter what. Until this breaks, my attention will still be here. Until here breaks, my attention will still be here. So also in a bearish formation, price is giving you this top range, down range, and then price expanded. You're waiting for 50% of all of that move. Here becomes your point of interest or your potential area for redistribution. So price came, cleared all of this, and you want to take this as your entry is fine. You are okay. But your entry, once you catch a buy from here, you look to take profit from the 50%. And then from the 50%, you now want to start looking for a lower time frame evidence to take price downward, because you know by structure we are bearish. By structure we are bearish. So you still want to keep here as a potential area for redistribution, and then you want to take price downward. So once price comes and give you all of that move, price comes, gives you all of that move, and then you can seek to now take price down. You can seek to take price downward from here. Price comes, gives you that, then breaks structure, all of these. The price is not going to come back to this place. Either you take 50% of this or just play the imbalance around this place. So these are when you are now combining everything, like everything, you are combining everything together. So any question before we go to the chat? Any question? Any question before we go to the chat? If you have your question, just unmute and ask your question. Let me go to the chat now so that we can look at. Oh, fine. What I'm waiting for. Okay, that's not rich. All right. This is 101S. 101S. Someone was asking me, I think Dash, I guess he's still on the call. Okay, it's no longer on the call. He said he's at work, so I think he will watch it. All right. So he was asking me why I choose to play all of these while I'm looking at playing all of this. Now, let's go to the daily, because we take our structure from the daily. From the daily. Just ignore whatever is there. Ignore whatever is there. Structure from the daily. Price gave a high and broke structure. So I'm still looking at this place. Price broke structure after giving us a higher high. So this was like a sweep of liquidity. Price closed above. Let's see, price closed above. We have looked at this before, and then came and now closed below. So this was a retracement now. Price is retracing. So this becomes my range high on daily. Let me put it here. This is my range high. Daily range structure, we are bearish. And this is my range low on daily. Top range and the down range. So I'll put this let me put this as previous week high. Let me put this as previous week high, because this is weeks now. It's weeks now. So this previous week high, but that's my top range. That's my top range. So on this retracement move, let's look at the range. Price gave us a high, a low, gives us a high. Came, gave us a low, and gave us a high. So on daily, that's weekly high. This was my range, weekly high. So let me call this previous week low. Previous week low. So this on daily was a range for me at the time. This was a range for me at the time, high and low. And price came, broke structure here, came to this place and retraced down. But if you had played this imbalance that was here, you'd have cut all of this. But price came and took you out. That's the example I just gave now. That's the example I just gave. Because you are playing the wrong range. This is the range. Price is bullish on the retracement leg, the retracement move. So this was the range low and the range high. So you were waiting for all of these, expansion, retracement. This was the last expansion. So I would have just taken 50% of all of this last move, all of this. I've taken 50% of this, all of this, and wait for price here. So price went up, came to the 50%, actually taking this liquidity, went up. Price couldn't break. So if you were looking at the market from here, you said, oh, price is selling. This was a break in market structure. And then you entered this imbalance that was here. Entered all of this imbalance. Let's say all of this imbalance. And then you got an entry here. You sold down. Don't think that this price was going to clear this low, this range low. No, it wasn't going to clear this low because we are bullish on the retracement leg. Top range, down range. So price is retracing to the down range. Forget all these. These are just within. This is structure within structure. High, low, high, low, high, low, higher, high, and price broke structure. So price came retested, taking this one now as internal liquidity. And once internal liquidity is taken, we can now go for external liquidity. So price took internal liquidity. Now price is going for the range high as external liquidity. Now price came and cleared it and gave us a new range high on the retracement leg. Price gave us a new range. So this becomes the range high, and here now becomes your range low. This is most recent low. This is most recent high. So maybe I should put it like that. Most recent. This is my most recent low. So that those that watch the video later will understand most recent. So on daily, this is my range. This one has been traded. We've taken profit from here, but price has cleared it. So now this is my most recent high, most recent low. So I'm expecting that if price comes here, I'm going to be buying. If price comes to 50% of this, I'm going to be buying. I'm going to keep buying until price breaks structure. Yes, sir. I'm going to keep buying until price breaks structure. Let me remove this. We are done with that side. Now this is 50%, so I can remove this to make my chart look clean and remove all of this. Now I'm expecting price to that come here and go up. But what will you find? Within the structure, we have a high, a low, a high, a low, a high, a low. Price gave us a high, a low, a high. Price came, broke this, broke this, broke this. So I'll take this as my break in market structure. So since price has broken structure, I'm expecting price to come back to all of this. But I'm still having in mind, bearing in mind that this is the most recent low, this is the most recent high on daily, most recent low, most recent high. So let's go to the 1 hour. Let's go to the 1 hour. You're going to find out that within this range, price is giving another range within the daily range. There's another range within the daily range. This is what price is doing within this current range. Correct range, price came, swept this, came into all of this, into this imbalance, came into this imbalance, and then cleared liquidity to the downside. So we're expecting to sell from here. We're expecting to sell from here. Price didn't give us that entry. Price closed above. Now we want to just be playing what price is. We know we are within the daily range. What can you find? This becomes your down range. It's a down range, low range, range low, and then this becomes your top range. Or do I annotate it like this? H1 range high. I think I should make it like that. H1 range high, H1 range low, H1 range low. So I want to play within the range. What can I find within the range? A high, a low. Then from this high, price has giving us a break in market structure, cleared liquidity down, and then price had not come to this level as at when I had this. Price cleared liquidity. So what am I supposed to do? I would have been looking for 50%. I'll just mark 50% of all of this. So this is what I would have done. 50% of all of this to the highs. Then what did price do? Price traded back into the 50% and went down. Price is supposed to come and break this range low. Price didn't break the range low. Are you following now? What did price do? Let me remove this now. Price didn't break that, but rather price returned back to, because there was still a smart money cube. There was a smart money cube here that price came into. Price took this as liquidity, this first move, traded back into it, gave us another break in market structure here. You can see the break in market structure. Price still within that range. I'm still trading within the range. So let's say I caught this first one and I had some pips and I got knocked out. I'm still trading within the range. Price returned back to that range, traded into the smart money cube around this place, gave us what? Another break. So since price has given us another break, what am I to do? I'm going to now come back and take 50% of all of this move. 50% of all of this move that led to the break. Then I want to map out all of this place and wait for price within that zone. So this becomes, sorry, I deleted the wrong one. This becomes my point of interest. This is my point of interest now. All of this. And if you check very well, there is an institutional candle here, mitigation candle that price should come into around this. There's an institutional candle that price should come into. So price has not tapped into that candle yet. But I found another smart money cube within this place. There's a smart money cube within this place. So that's why I have my first one of my entry here. That's why I'm looking at taking an entry from this place, because there's a smart money cube around this place. So price should come tap that smart money. And you can see this price has not reached the 50%. So this one is simply internal liquidity. So you can see all the liquidity building around here. Liquidities are building around here, external liquidity. So if price should tap us in, this is what I'm seeing. Price should come and take first liquidity and then take the range low. Because by daily, I'm still expecting two things. By daily, either price should trade into this place, we buy up, or price should trade into this place and we sell down. Two possibilities. Price should trade here, we buy up to continue the high, low, and we get a higher high. Or price should come here and then we come down. So whichever way, you can trade within the range because you have a higher time frame structural bias. You can trade within the range. So let me give you another example. This is last one already, so that we can. So that's why I marked this and I had this sent to the group. So let's just keep an eye. Let's see if we can have it. If you can't find, take an entry. I think I'm already seeing what price is doing. Then fine, let me go to 15 minutes. Let me go to 15 minutes. 15 minutes has its own range. We want to mark the range of 15 minutes. This is 15 minutes range. This is range of 15 minutes. Orange 15 minutes. Price came, gave us all of this break in market structure here, traded down, and then give us another break. Go to 5 minutes to find it, give us this push up. So price has come to this imbalance. And if you go to 1 minute or 5 minutes, once there's a break in market structure here, I can take a buy from here, aiming to catch the entry to this place. The same thing, the same principle. Let's go to 5 minutes. 5 minutes. So this is my 5 minutes. What's my trading range in the 5 minutes? This is my low range. This is my top range. Low range, top range on the 5 minutes. So price gave us this break of structure, came into that imbalance. Let me remove this. I traded that away. Came into that imbalance, went up, came down, gave all these movement and blah 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 and all of that. So price can do two things from here. Price can come back to this place. This is a break in market structure here. You can see an imbalance where price is coming to. So price can come to all of this, and then we can look to buy up. Or price can just break structure from here. You can see what price is doing. Price can break this structure from here. I think it has broken already. Then it can retest and we go up. You can keep playing within the range and just catching some little piece. But if you want to play, I think I prefer playing the 1 hour range and the daily range. Daily range, and then I scroll down to 1 hour to see how to get an entry. So that's just how we play ranges. So let's look at another asset. Maybe we deal with one of the crash and boom. Okay, this is boom 500. We're still expecting an entry around this place. Let's go to daily. Let's see what boom 500 is doing. Boom 500. Okay, I think I sent out this markup before. Boom 500, this is a high and a low. You can see that those double bottom there, indicating that there's liquidity within that zone. There's liquidity within that zone. So I'm expecting price to retrace to this, which is 50% of all of this retracement. So I'm expecting price to come to 50% of all of this. This is what I'm expecting price to do. All of these retracements. And then I think I can spot this as my internal liquidity. We take this internal liquidity, then we can go down to take this external liquidity. So now what is my range? Top range on daily top range and daily down range. So let me annotate this. Daily range high. Daily range low. I hope you understand all these short form I'm using. Daily range high and the daily range low. Now price is bullish here. I want to see if I can join this retracement. Here is a range low because it's already retracing. So I'll go to my 1 hour. Let me see what is happening on this retracement leg. Because when price is retracing, price will still give you that formation of a higher high and a higher low, higher high, a higher low. So this is my daily lows. So let's go to 1 hour. This 1 hour. You can see all of this double bottom here, and price broke this. So immediately price broke this. Price even broke this. Yeah, but it was above this. So price broke this. What did price do? Price came back to this imbalance. I wouldn't have been able to play this. Okay, no, this is not the one I played because I would have been afraid of this liquidity here. That price might come for the liquidity. So I know I wouldn't have played this. But price came and broke this. The high, higher high, this becomes my range. This was my range. This was my 1 hour's range. Top range, down range. Price came after retracing, came into this and broke this top range. So this was taken as external liquidity. Here is now my new range. This is now my new range. Price retraced up. Didn't come back to 50% of this retracement. Price went up, gave us another range. So this became the last high range as price started retracing. Price came, gave all of this, gave all of this. And what did price do? Check that imbalance there. Price came to that imbalance. And this was the one I analyzed with one of my friends. This is one of my friends. Price came into that place. So if you had gotten an entry from here, and then let's say the stop loss around this place would have been fine. I think it was even here I got my entry. I think it was here. Yeah, maybe I think I got my entry there. I played this one that Friday or Saturday. I think it was here. Stop loss here. Yeah. Don't to go searching that, but now I had that entry. And then now price has broken this top range. So this becomes your next top range, and it becomes your next down range. You understand? So if we keep going, you discover that you can wait for price to come to all of this and then you buy. But since I'm expecting price to sell, price has not really gotten to 50% of my daily range. I saw something on 5 minutes within this place. This 50 minutes. I saw something on 5 minutes that I want to play. So on 5 minutes, I saw all of this break. By 5 minutes, I saw price broke all of these. And price cleared this. So I'm expecting price to come to all of this, 50% of this. So this is what I was looking at. If I can catch a sell from here downwards. It may play out, it may not play out. I don't know. I don't know if it's going to play out, but no, let me put it on 30 minutes. But I'm just trying to play what I'm saying. So I saw this on the, okay, I think it was on the 30 minutes. Yeah. I saw this on the 30 minutes. Price has taken liquidity from here and broke this. So I might want to catch this sell, and you can see there's an imbalance if I think I want to play the entry 19 pips stop loss is within my stop loss point. So I might want to play this my down range on 1 hour, and this is the top range. So price can come into all of this and then we push up. Now we can keep pushing up to the daily point of interest. So I want to take profit from here. That'll give me like a 1 to 5 if this activated. But I'm playing the range, top range, down range. Now we have a new top range. This becomes my range high. Range high. This is 1 hour range high. I don't need to write that, you should know. This is my range low. So sorry, not this. My range low. This is my range low. So I'm expecting that. That range. So I want price to come to all of these and give me that entry here. Now, if price comes here, what am I expecting? Price should give me an entry here to go up because price has broken structure here already. You can see there's a break here and there's also a break here. There's a break of this high. So price should come and retest this place. If I take all of this, I take 50% of all of this. You see that price is going to come to around this place. So I can even take profit from this liquidity here. That's a 1 to 4. That's a 1 to 4. So you see that's how. So if I go back to my daily now and I catch a sell here, I can catch a buy here also because I know the range. This is top range. So if I catch a buy, I can just keep holding it. If the buy comes to this liquidity, fine. That would be a good long entry. Why am I able to take that entry? Because I understand ranges. First, I understand structure. Second, I understand ranges. So I can begin to play within the range. Take a buy, take a sell, take a buy, take a sell, just like that within the range. This comes down to what I've always said. You can make profit from one asset. It's just that because personally, I used to trade just 3 assets, but now that I have people that come to me, let me analyze this, help me check this there. Maybe I analyze it, like you can see 4 trades open on my chart now. You can see 4 trades. I'm expecting this to play today. I'm expecting boom 5, whichever one. These are the trades I want to watch for the week. It's 10, I'm expecting price to still push up, take out this liquidity, and then we buy. And then on the 1,000, I'm expecting price to come to all of these, and then we sell. This is 500 that we're analyzing. I'm expecting price here for the resale. But while I'm waiting for the main sell by structure, I want to play the H1 range and see if I can get some good risk reward from that place. And I'm also expecting with 10S to give me a play within this zone. So I'm just watching out. That's basically what ranges is all about. You want to wait for price to come and give you all of that lower time frame entry. You are playing within the range, and then you can catch both the buy and catch the sell. Once there's a break of structure and market retest, you can just play. Don't come and ask me, sir, is it going to play out? You don't move the market. I don't also. So you just want to play what you're seeing. I saw this 30 minutes break. I'm expecting, I think I want price to come here because of all of this imbalance. Price should come and feel all of this imbalance. I'll give it around 1 to 5. Yeah, something like that. So top range, down range. So once I'm giving you assignment now because I'm bringing this call to you, close. Once you are doing a markup for me now, if it's H1 you are doing it, put your range. I want to see your range. Top range, down range. If it's on 4 hours, I want to see your range. Top range, down range. And you must do that in line with structure. If it's a counter trend, if you put your range, I will know. I will know whether it's a counter trend or not. Like this, if I mark this and I send it out, you will know that this is a counter trend because price is bullish on the 4 hours. Meanwhile, on the daily, price is bearish. The 4 hours is trying to go up to come and align with this. These are all liquidities resting around this zone. These are liquidities. So price is bullish on the 4 hours. Price we need to go and align with the daily. So on this retracement move, this is my range low, this is my range high. So I can sell from here and then I would love to buy from here. So I would love to buy from here. Yeah, I would love to buy from here. How many pips is this? This is 25 pips stop loss. That's fine. That's okay. So long as within my risk and trade management view, then I can just place my limit here and then I'll get a 1 to 5 from here. And then once price get to 1 to 3, I take my partials like 70%, and then I can hold the trade all the way to this external liquidity. I'm seeing an external liquidity around this place. Sorry, internal liquidity. Sorry, don't mind me. Internal liquidity. Same internal liquidity around that place. So I can hold price down to all of that. If price blasts this one out, there's no problem. This becomes my low range, and then I'm waiting for a retracement, and then my evidence to get on the sell. So price can come and then keep going down like this, and then price comes here, give me that break of structure, and then you can see to go. This is what I am anticipating, and this is just all about range. You have questions? Let's take the questions while we bring the class to a close. Questions right now. How many of us are on the call? Okay. We have 3 persons on the call. That's fine. That's okay. So let's have your questions. Okay, just 3 of us.
No,
Mr. Friday, you
good,
can ask your
good.
questions. Olu, you want to contribute? Fine, go ahead.
For now, I don't really have a question. I understood all what you are saying. The only challenge I was having, I think I got clarified today. You know, most of the time I will check the trend and I wouldn't know that the trend I am on currently is just like a retracement,
Retracement.
pullback. Because what I mean retracement rather. So now you just said a daily trend. Our daily trend should be our most area trend that we would consider.
Yes.
I think that's what we are saying.
Daily. Weekly.
Structure. Yeah,
Daily,
trend.
weekly.
Yeah.
That's what we use for
weekly.
structure.
Yeah, I think that was what was really confusing me. It's okay. It's okay.
All right, Mr. Bolu, you want to contribute? Go ahead, sir.
No, you've already said most of it, or you already said most of it. This is very, very clear, very, very clear. In fact, I saw some things now that even made it more clearer for me, especially when you were breaking down the 10-1S. Yeah. So it made a lot of sense. It made a lot of sense. Nothing to contribute. We see the same thing basically. So same thing.
Right. Thank you so much, sir. So every other person that will be watching this market structure training today, this is your assignment. Henceforth,
Okay,
any other markup you are doing, either on your journal or on the Smart Traders group or on the mentorship group, you must state your ranges. You must state your ranges. Range high, range low. Or you use top range and down range, whichever time frame you are working on, it must be clear. If it's not clear, I'll personally remove the markup from the group. That's your assignment. You must make sure you spot the ranges.
hello,
Let it be there. Yes, sir, go ahead.
I remember something now. I don't know, most of the time, if I want to enter the trade,
Yes, sir.
I don't use pending order. I use market execution.
Execution. Okay. So how do you calculate your risk?
So that is it. That is the question now. That is even what I wanted to even send to you. Because I discovered that for me, because I just watched the boot camp video number the day 2. And I discovered that there are some calculations there before we can now enter a trade. So I was like, let me ask, is it that the trade we must use the pending order or market execution? Because if we use market execution, we cannot calculate all these.
Yes, that's why it's even best, not that it's better, it's best to use limits. Because by limit, your mental, your, how do I want to put it? You know everything you are doing. You know how much you want to risk. You know how much you are putting on the trade. So your sanity is not messed up. Your psychology is not messed up. So if you use the pending order, you already know your stop loss value. Okay, if this trade goes against me, I'm going to be risking $15. And you have removed that from your mind because you're a businessman. That's what you want to do. So if you lose it, it's fine. But assuming you use market, let's say you are trading crash and boom, and they just market executed. You don't want to go and look for where to put your stop loss. Before you go to put your stop loss, it spikes against you. And while you are market executing, mistakenly you use like a 10 lot size. And the spike goes against you. What happens? The account closes. But if it's a limit, you set your mark trade, you put your stop loss, you put your take profit, then you are going to be able to see, okay, I made a mistake, or you can delete the limit and reset it in case you use the wrong lot size. Also, your stop loss value must have been properly calculated. Like this is been 500. I want to raise like a $10 on this trade. Is the stop loss pips that you must check? What's the stop loss pips? So this stop loss pips, check here, is what? 19 pips stop loss. And you know, we use between 20, 25. And if you have a big account, 30 pips is okay. But if you have small account, 20, 25 pips is fine. So you have your, let's say 19 pips. So what do you do? What's the dollar value? Let's say you want to risk $15 on this trade. It's just to say your $15 divided by 19 pips. It will give you the lot size you should use that will make you to only lose $15. So limit is best. Limit is best. I don't market execute because I don't have the time to sleep on. Let me touch on step a bit. I think we all were looking at selling step yesterday.
But, yes. I saw the massively.
Yes, I saw it. So let's say $15 divided by 19 pips.
0.7.
No, sir.
0.7.
$15 divided by 19 pips.
It gives you 0.7.
Okay, sorry, me, I'm multiplying, Joe. Yeah,
So it's
0.07. So, and
0.7.
0. Good. And you have what's the lowest lot size on boom
0.1.
and crash? 0.2.
0.2.
So it means that if you want to risk $15, you use 0.78 as your what's it called?
Size.
As your lot size on your MT5. So you're able to tell exactly how much you are risking. How much you are risking. So that's just market execution. You might make mistake. Then you want to enter 0.5, you enter 3 lot size. And then you are crashed out. It's not, the mistake is more in market execution. So that's it. Let's check that step. There's something. Should I keep recording? All right, let me use that. I don't want to exit what I'm doing. Let's check that step. There's what I was looking at yesterday. What I'm saying. Let's record. I'll grab the record so that you be here. Let's have the talk together. Yeah, this late comment. All right. Let's look at that step. What I was looking at that yesterday. First, we take our structure from the daily, right? So let's look at daily. Let's see what daily structure is. Let's look at what daily structure is. Step index, we take our structure from the daily. So let's see together. All right. This is daily, 24 hours. You agree that price is bullish because the body of this candle closed above. But also remember that we distribute above the highs. Very important. Don't forget that. Once there is an external liquidity swept, we distribute above the highs. So let me put it like this. Normal annotation. This is previous week high. Previous week high. Are you getting it now? This is my previous week high. Yes, I can hear you.
Why is it previous week high? When we are on daily chart.
We are on daily now. How many days made up? This is already weeks. But these are days. Each candle here is a day. These are days. This can even be previous month high.
Okay.
It simply means I'm talking of the range now. As at when price was still there, that was our top range. This was the down range. This was down range. Let me put this as previous week low. Let me explain now. By ranges, now structurally, we know that market is bearish, right? Look, you can see it. High, low, high, low, high, low. It's bearish. It's obvious. Price pushed up a bit, came down, pushed up again, came down. Now, price came up. We're expecting price to keep going down. That one is sure. Why? Because price took out this last high, which was the last high, telling you that this is no longer the range. This is now the new range. This is now the new range. It's a new range. This high has been taken up.
Yes.
Good. Thank God you're following. Now we have this high and this low. Price has taken out this high. So this is a new range. This is my new range. Down range, top range. Down range, top range on the daily. So let me put this as range high. Or let me put it daily range high. Or daily top range. To make you understand it. Now, there was a week of this external liquidity. Assuming you were buying from here, we took price by wicking out this. We always have distribution above the highs. If you go back to market order flow video, once you get to a high, expect a distribution. So since this is daily, let's go to 4 hours. Let's see what
distribution, sir, or accommodation. Okay,
we distribute above, we accumulate down.
All right, yes, down.
Yes, distribution is to sell. You are giving out things. Now that's distribution. A layman English. To distribute is to release. You are selling out. Accumulation is to gather and stock up, buy, to accumulate. So just know that. Now this is H4. Let's see what happens on H4. On H4, when price came here, price gave us a high, I believe you can see this, a high, a low, higher high, higher low. And price rallied down, breaking all of this. This would have been the first break of structure, but price went up and weak out everybody here.
Yes.
So this became our break of structure. This became our break in market structure. Break in market structure. After taking out this high, price broke structure downward. So this became my liquidity sweep or stop hunt. When price took out this structure, price really never came back there. Price really never came back there. This was the break in market structure. Price has not come back there. So what do? I'm going to wait for price in all of this move before this rally down. 50% of all of this move. So this is 50% of the move. This 50%, all of this move. I'm going to wait for price here. I want price to return. I can remove this now to make my chart clean. This is my top range, daily range. I want price to come to 50% of all of this move and distribute. So what's the distribution? Price, we need to come and break structure again on H4 in this zone. So what did price do? Price came back into this place. It's obvious, right?
Yeah.
Price broke structure. This is now redistribution. Redistribution. Distribution happened when price came there. We're expecting price to come there. This is now a redistribution. Price came, broke structure, and you can see that liquidity sweep. You can see that liquidity sweep. Let me zoom it out. You can see the liquidity sweep. So since price has broken structure now, I want to wait for a redistribution. I want price to redistribute, so I'll go to 1 hour. But if I go to 1 hour, where am I waiting for price? All of this move. All of this move. I'll wait for price at the 50% of all of this move. I'm waiting for price at the 50% of all of this move. So I can remove this now. So my focus is here now. Are you getting it now? So my focus is on this box.
Yes,
this is my area, potential area for redistribution, or I'll just write POI, whichever one you understand now. This is my potential area of interest, my point of interest or potential area for redistribution. What it means is that if I go to 1 hour, I want price to break structure around this place. Price came, cleared all, these were all liquidities, all of these were liquidities. Because if I took 50% of this box, I took 50% of all of these box, you see that this was where price was supposed to come to. And this is the price came there. Now price came to 50% of that box. Let me mark 50% of that box. This is 50% of this box. This is 50% of that box. Let me turn this to green. So 50% of this box is where I'm waiting for price. Let me remove this now. I'm still anticipating that price should go down. So I go to my 1 hour or 15 minutes. So on my 15 minutes, this is what I'm looking for. A break of structure and price should come back inside. So price came, gave us this break in market structure. You see, we are this had to scale down. Higher time frame point of interest, you want to keep scaling down to get the best entry. So since price has scaled down, we have scaled down now to 1 hour. You can see that imbalance. Or I can do the same thing. I take 50% of all of this move. There are two ways to play this. Either I'll just set my limit on 50% if it is within my stop loss value. What's the stop loss value here? 27 pips. You can see the stop loss value, but if you have a small account, 27 pips is a wide stop loss. So you can just come, remove, you can just remove all of this and go to lower time frame and wait for price to come here. So let's go to 15 minutes. I don't want to take 27 pips. Let's go to 15 minutes. Let's see. I'm still expecting price to sell. So I had all of this. I waited for this yesterday. This was what I was waiting for. Price was already in the box. Price was already in my box. Please follow me. This is the last example so that we shut down. This is what I saw. Let me turn to line chart. Price gave all of this. If you go to 5 minutes or 3 minutes, you see price broke structure here. So when price broke structure here, let me write this. Price gave us a break of structure here. I entered here and price came down a bit. Price got to 1 to 2 or so. But because I wanted to go and sleep, I didn't stay till close. But price gave the clearer move. Look at what price did here. Price swept this liquidity. This is now on 15 minutes. Price swept this liquidity and rallied down and did what? Gave us a break of structure. So since price has broken structure, there are two things I would have done if I was to play this. I would have just played the open here, which is here. I just played the open here. I would have been activated on this. If I play the open here, my stop loss is here. Stop loss value now is what? 10 pips. So I'm losing 10 pips. Then if this one gives me 1 to 3, 1 to 3 will be around. Let's say I take profit from this flow. That would have been the first move. But if, like what you did, I know you caught this entry. This was the best entry you'd have used to play this. So I have slept. Yes, yourself. I think you are the one that caught this. Yes, this was the entry. Price gave you this break of structure. I saw what you played. Price broke this structure. And then there was an imbalance spotted.
Yes.
This was the imbalance here. So you would have just played this imbalance, and I think that's what you played that gave that first entry.
Yeah, that was what I played.
I saw your chart. I knew what to play. So this was it. Your entry, stop loss here. Stop loss was just 7 pips by playing lower time frame. And all of this move, like all of this move is mad. Like mad. That's how many stop 1 to 6. By risking $5, you make $30 on this trade. By playing,
I made a $30.
$30. Good.
Yes.
By playing what? The lower time frame, you bring it down. It's the same we are waiting for redistribution. Now price is coming up. Let me go to 15 minutes. Let me tell you what I'm expecting on 15 minutes now. Those that are on this trade, they are taking profit already. They are watching out for the next move. Yeah, I think let me go to 1 hour. There's still something I'm looking at on the 1 hour. There's still something I'm looking at. On the 1 hour, this is my range. On the 1 hour, this is my range. When price was coming here, this is my range. Low range and what? Up range. Until this up range is broken, I'm still bearish. I still want to see price go down until this top range is taken out. I'm still bearish. You get it now? And until it's only when here is taken out, I will not say okay. Otherwise, I know we are bearish from H4 daily 1 hour. So I want price to still come here. So this could be liquidity. Who knows? This might be liquidity because I'm seeing like a double top here. I'm saying maybe price wants to give us a double top. Who knows? We cut that double top and then we go down. But if I want to take this trade now, it's just to go to 3 minutes or 5 minutes and watch what will happen. If I see a 1 minute break of structure, I will play the imbalance straight up. Because I know we are still bearish. Otherwise, if we don't break this, we are still bearish. Once we break this, I'm playing the range, remember. Top range, down range. So until this place is taken out, I'm still bearish. If this place is taken out, then we are bullish. I'll now wait for price to come back to 50% of all of this. Maybe I'll now have I'll now have the box here. If price break above, then price should come here, retest, and then we go up. But I'm not going to look at that now. I want to keep looking at being bearish. Price has come there multiple times. Price broke structure here, came down here, had the first move, which you joined. But I'm still bearish until this place is broken. So price can come and take out this. I don't know. Is it going to take it out just in 30 minutes time? I don't know. Is it going to take it out in 2 hours? I don't know. So you just want to go to lower time frame and begin to watch what price we play. It's a double top, and I'm looking at this place. I'm not seeing anything really interesting here. I'm not seeing anything interesting around here. I'm not seeing anything interesting around here. I'm not seeing anything interesting. But why is price attracted to the top? I don't know. But I'm still bearish otherwise. This candle has been mitigated several times. So I'm still bearish. Yeah. That's why you take profit early. Take 1 to 3. Price may come to entry at any time. Yes. Look at this mad guy. He's going down. You must come and pick me. If you don't pick me, I will sue you. I will sue you.
So,
see this guy, so 10 minutes is just going down.
That's what I'm saying. But if you go to, I think 10-1S wants to play this range, wants to play the 15 minutes range. So let's just be positive. I think it wants to play the 15 minutes range. Yes. Price should play this.
You come there.
So this is the range. Yeah, this is the range currently. So long price has broken this top. This is the next range that price may come and play all of this. So I'm still bullish. I'm expecting the bearish move until otherwise stated. Yeah. So price has, yeah, he's got. So price has broken this. I'm expecting price to come here. Price can come here. Take out all this. You see this triple bottom, some form of liquidity around here, and then there should be one small imbalance. So price can come to this imbalance and go up. But I'm waiting for this guy here, and it must come. It must come. Mr. Bolu, it must come. Let's just be patient. It will come.
It will come. No, definitely it will come.
It will come. So long it is still within the range, anything can happen. We just have to wait within the range and see what price we do. So I think I was able to answer your question.
Yes, sir.
So you just wait in 1 minute or 3 minutes for what price you do. If you see a break of structure on this step index, then you can set your limit on the imbalance or the open of the candle. There's the imbalance or the open of the candle. Since it's a lower time frame, you can set your entry or imbalance. Any other question?
Which tool do you use to mark the 50%? These other tools.
I use like box, the box tool. Box.
Okay, box tool. Okay.
Gang. Just go to this place. Come to a see gang. Okay, gang box. And once you come to gang box, then you now edit it. Yes, you edit it. Just come to the setting, and then you can do all the setting. I removed everything. I only left 1, 0, and 50 because that's what I want to use it for.
0, 1. Okay, 1, 0, and 0.5.
0, 50, and 1. Okay. So that's just it. I think I'll need to bring this video to a close now. Let me attend to one of my senior guys here.
Thank you so much.
So I'm gonna wait on 3 minutes. If I see a break of structure on the 3 minutes, then I'll play it. Yeah, I'll play it.
But it's currently now I'm on VIX 50. So,
okay.
Yes, the thing is actually I have so small, but before I knew the thing is retracing. Maybe I'm looking at
VIX 50.
Yeah.
Let me just end this call here. Please, any other markup, just ensure you put the ranges for me. Let me stop this call, then I can look at